Joe,
What's up, sir?
you know, no school tomorrow for the kids.
Oh, that's right. I forgot about that. Thanks for reminding me. I completely had no activities planned.
Yeah. Uh, and lots of, well, a little bit of shit going on in the news today. Would
Yeah,
you
I
say?
didn't. I didn't. Well, I mean, crypto wise or
Yeah,
all
I mean,
news?
Treasury Department shit. We'll get to that in a minute.
Oh, yeah, I just skimmed that a little bit. I mean, again, it's like it's the same thing with like the tornado thing. Remember we had that debate with about tornado cash and
Well, I've got a
yeah.
little bit on that today too. It's interesting.
I mean, there certainly are bad actors using those services, but at the same time, there's a lot of good actors. So I think that's
Exactly.
what when everything kind of when you talking about DeFi and blaming the North Koreans about everything, I'm kind of like, I don't know, that's a stretch. I mean, I get it; it makes their argument, but we know
Right.
that's actually a very small part of it. um,
Exactly. And,
yeah,
look, this idea that, well, I guess we can just jump into it. So,
sure,
I mean, I haven't read it in detail. I've looked at some of the assessments. The folks at Coin Fund did a thread on it, and that's probably, from my perspective, the best source. But what's really interesting in here is they talk about how DeFi must be under AML and KYC, and then they acknowledge at the same time that there's some that won't be able to be under AML and KYC. And then where and then there's this. It's almost like there's like opposing sides in the administration writing these articles. It's kind of fucking hilarious,
there
right?
usually is. There usually is, though. That's the thing. It's like we like to think of it as like U.S. government, but there's so many different factions advocating for different things and nuance that
It's
you're absolutely spot on. There's no consistency.
it's just so
So
weird that in the same article, it's like weirdness. So it says this report recognizes, however, that illicit activity is a subset of overall activity within the DeFi space, what you were just saying. And at present, the DeFi space remains a minor portion of the overall virtual asset ecosystem. Moreover, money laundering, proliferation financing, and terrorist financing most commonly occur using fiat currency or other
yep,
traditional assets as opposed to virtual assets. And it's
yep.
like, and this whole report is about the risk of using virtual assets for terrorism. They're a fucking hot mess, dude. They're just
Yeah, it's like they have to get stuff out. Um, but then it's like you read a 20-page report or something, and the last paragraph just moots everything you just said. Which
exactly
makes it like, what is the point? I mean, I get it. Everybody's trying to figure it out, and DeFi to me is one of those ones that's you know, um, it's always going to have some level of anonymity available out there.
right.
There's just no way that it's going to be completely subsumed into this, everybody, unless it's in a contained chain where everybody entering is KYC or something. Um, I mean, maybe that type of application could exist, but for the most part, that's what makes it work.
Yeah,
Is the
exactly.
fact that all the features that also make it a tiny bit bad for some people. So
Exactly. Let me try to find Coin Fund's analysis. I just had it
we,
up and now I
because here's
can't
when
find it.
we always bring up the North Koreans, but and they do a lot of super shady stuff. But at the same time, okay, so let's say they're laundering in DeFi. Well, what would they be laundering? The only thing they'd be laundering really there would be hacks, money from hacks. Because if you're out trading meth or whatever they do for crypto, then why would you go launder it through a DeFi engine or a Tornado Cash or something? You would
Right.
just be wanting it converted into fiat somewhere. Well, I don't think they can do that with any, unless you're converting it into North Korean won or whatever their currency is. I just don't see, they have the same problems as everybody else,
Exactly.
going from crypto to cash. So I see it really their preferred method being containers of cash being
Yeah.
shipped around on ships versus moving around. Let's go get some yield in a DeFi protocol. That doesn't really make a lot of sense to me.
No, it's just nuts, dude. It's like, what the fuck? I don't I don't get it. Anyway, but bottom line is, that, the coin fund or DeFi fund, DeFi education fund says that, they don't understand that the Bank Secrecy Act was developed based on the laws of the 1970s. DeFi protocols allowed to engage in transaction new ways. And they must understand the fundamental differences of it. And so they kind of give that assessment. And then they where the hell was the highlight I wanted to pull up? The assessment acknowledges, despite the arguments above and depending on specific facts and circumstances, a DeFi service can fall outside the scope of existing AML CFT controls, which I was just talking about.
Yep.
Right. And so it says, to the extent a DeFi service falls outside the current definition of a financial institution under the BSA, a vulnerability may exist due to the reduced likelihood that such DeFi services would choose to implement AML CFT measures like assessing illicit finance risk, establishing an AML program, or reporting suspicious activity. I mean, that's what I mean by this thing is so split personality. They, of course, then question the value of privacy. So, standard government shit. And
what is that? It's the Fourth Amendment is the privacy one, right? It was about like to keep the British troops from being able to garrison in like people's houses or something like that. It was like the Castle Doctrine. All right.
It's anyway. So there's a set of questions. There'll be a public period of commentary, blah, blah, blah. But, anyway, Chuck says it's just a convenient tail to wag the dog. They want to take down control crypto and DeFi. It doesn't matter what the excuse is. It's just mission accomplished. Yeah. Look, I mean, I think at the end of the day, they do want to do that. And they're struggling with the fact that they probably can't unless they ban it or they shut off payment rails, which we talked about. But I'm encouraged that some folks within the federal government are saying the smart shit, like there's very little illicit activity relative to fiat going through this system, and that there will be protocols that do not qualify as institutions, like almost all of them. So anyway, it's going to be really interesting. And then go ahead. Sorry.
No, I was going to say, it's, I mean, again, we still haven't solved the ICO problem from 2017. Okay. And I say problem loosely. They're just figuring out about staking yield and stuff like that. Oh wait, you can get interest on Matic. It's like, and now, and they obviously did some preemptive stuff on Tornado Cash and the mixers, which I mean, I'm sure they've been chasing bad actors through those shoots for a while. And so you get the publicity there. But again, we don't talk about, Iranian dissidents or Hong Kong dissidents or Russian dissidents and how they use Tornado Cash. So it seems like there's these multiple poles in, any big enterprise or let's say bureaucracy, like say U.S. government. And I don't want to say half, but a lot of the people see the strategic advantage of like leading with this technology. And then a lot of other people, like, more the accountant types or whatever, or the school marmish types, they're all like, oh, no, you can't have that because, one person might be doing this wrong. Right. And, they want to go protect everybody. And at the end of the day, America was built on one thing. Everybody gets a shot. You go take your swings at it, you succeed, or you get annihilated, one or the other. Like, that's what it's all about. It's the roughest capitalism around. And I find it funny when we have these sort of free enterprise wheeling protocols everywhere. And the first thing that people want to do is come down and, figure out ways to shut them down, even though they're not really shut downable, a lot of them. So it just seems like a lot of nonsense,
Nibbler makes a great point we talk about all the time. If they're worried about illicit activities, they might be shocked by what HSBC has done. Shocked, I tells you. Yeah, I mean, it's absolutely the truth, right? Every one of these major banks, especially, I'll just say, a lot of major banks have been guilty of knowingly laundering money, have been guilty of harming indigenous countries, have been guilty of harming accounts. people that are their customers. I mean, there is every type of corruption and graft and grift within the existing banking system that still has yet to be cleaned up. All they do is slap them on the wrist and give them a fine, and they always make more on the illicit activity than they did paying on the fine. So, it's just a cost of operations for them. So yeah, totally agree. It'd be really nice if they actually cleaned up the existing banking system. Well, so to Tornado Cash, Coinbase continues to impress me. It's like, they are gung-ho on DeFi. I've been reading more about Base. I'm going to talk a little bit about that in a minute. They continue to impress me. They have gone all in on decentralization, on lobbying on behalf of decentralization. And in this case, this is from the chief legal officer at Coinbase. They backed the legal challenge to the sanctions imposed against Tornado Cash. And so the plaintiffs filed a motion for summary judgment, asking the court to reopen Tornado Cash for everyone. An initial point: anytime we give privacy to everyone, there is a risk that privacy could be abused by anyone. But the Constitution and laws of our country recognize that we don't take away privacy from all just because of the unlawful acts of a few. The plaintiffs in this challenge are among the thousands of law-abiding Americans who want to protect their privacy online, but now can't because of the government's sanctions. Argument number one: the government can't sanction Tornado Cash because it's not a foreign national or person. We've talked about that. Argument number two: the law only permits the government to sanction a person's property. Property is something capable of being owned or controlled, but no one can alter, delete, or otherwise control the 20 smart contracts at the core of Tornado Cash software. They function without human control. If immutable open source software code can be sanctioned, it's hard to see why the government can't now ban any intangible concepts, which can't be what Congress meant when it chose the word property. Argument number three: even if an ownerless thing could somehow be property, these 20 smart contracts aren't owned at all, not by any foreign national or sanctioned person, and certainly not by people who happen to have a certain crypto token in their wallets. Argument number four: the sanctions violate the First Amendment. They're not narrowly tailored and block thousands of law-abiding citizens from using Tornado Cash to engage in socially valuable speech just because some bad actors also used it. This is some mere possibility. It's real. Take, for example, one plaintiff who used Tornado Cash for important political speech, donating to the Ukrainian government after Russia's invasion. Without Tornado Cash to protect himself from online reprisals, he's now hindered in expressing his views. So I love seeing that they're doing this. I love these arguments sound coherent and obvious. I have to believe that they expected these arguments to come when they did this sanction. I don't know if they were just trying to make a point or not, but hopefully the judges considering this will realize what an egregious infringement this is.
This country in particular is not supposed to be about guilty until proven innocent.
Yeah.
And they're just blanketly making everybody guilty. I mean, a whole bunch of stuff, even that recent stuff we heard a couple of days ago on, the VPN stuff, that one of those congressional bills or whatever. It's like they're really going after a lot of stuff that should be within the realm of privacy protection.
Yep.
And I don't see what they're so worried about. In the sense, okay, so you snatch a couple of North Koreans or Russians or somebody moving some dirty money through Tornado Cash. Well, that's not where you should be catching them at Tornado Cash. You should be catching them before, when they're trying to do all the bad stuff.
Exactly.
Or you should be catching them when they move the money or they move an action into, execution phase. It doesn't do any good to shut down things like this, because other ones just pop up. Number one, your better bet is to I would think, surveil the front end, back end of it, to see, and look for those bad actors that you're already tracking. I would think if you're running against some major, North Korean hacker ring, you probably got an idea of what wallets they're using.
Exactly.
So, why not catch them there, right before they enter, say, the Tornado Cash smart contracts or something like that. The work can be done better, or they should be better at doing this in ways that don't just blanketly shut down protocols.
That's right.
It just doesn't. It seems like they're going after the juicy target when, if they did their work, they wouldn't need to.
Exactly. Absolutely.
So.
Here. Couldn't be better said. Shizzy said, all that bass, no treble. Starting to love Brian Armstrong. Yeah, dude, I got to tell you, there's a lot of shit that I don't agree with Brian Armstrong on, but the first inkling that I had that fucking Coinbase and Brian Armstrong were true. You remember that whole debate I got back and forth with Sam at FTX on their lobbying positioning that really just positioned it to fuck everybody else and DeFi and make it all for FTX.
That's before they rolled under? Before they rolled under? Yeah.
That's the same kind of fucking behavior I expected from Coinbase, to be completely honest. And, you know, based on the fact that they're a publicly traded company and their interest lies in, currently their revenue lies in centralized services, I wouldn't blame them, right? If they came out and lobbied to protect their own interests. They've spent a fortune getting regulatory compliance, licenses, and everything else. It's a pain in the ass, let me tell you. Money transmitter licenses in every state, all the shit you have to go through, the foreign regulation compliance. So it's hard to blame a for-profit company for saying, to protect our profits, here's what we have to angle for from lobbying. When they came out with their lobbying document, it was all oriented to DeFi. It was talking about regulating centralized entities better. I was already kind of like, holy shit, that's awesome. Ever since then, they have done more and more and more to show that they are 100% in for actual crypto mission and DeFi and the ethos that we all want to see. So I applaud them. Absolutely. Chuck said, it's never going to make sense. There are bankers, oligarchs that see their control and aggregation of wealth being challenged. They will use whatever excuses sound good to the clicking public to control it. Niblet says, maybe Coinbase figured the FTX path may not be the best one to follow. Yeah, but they had their position out around the same time, and they were already moving that way. It's also known now they were already working on Base. They were already planning for that. Evidently, from an interview I read with the guy who heads up Base, Brian Armstrong had this part of their plan, where they are today and moving into DeFi, written out 5 or 6 years ago in their secret strategy document for the. So it is in their best interest to fight for decentralization, because that's a core part of their plan moving forward. So anyway, all of that's awesome. So this happened yesterday, which I thought was pretty cool. An anonymous donor donated the ENS domain base.eth to the Base project at Coinbase. Didn't want any money for it, and basically said, I don't want anything in return. Give me an address and I'll transfer it. He said, I want to do this because Coinbase has chosen to build on an open tech stack, and according to your recent Reddit AMA, is committed to decentralizing the sequencer and the exits to L1. I've been a Coinbase user since 2014, and I'm super excited for this direction. So I feel Coinbase and you should get credit for sticking to the principles of decentralization. I've listened to a couple of your podcast interviews, and I think you really get it. Please don't ever sacrifice decentralization as a core guiding principle. I thought that was awesome. And I think it speaks to what I was just talking about, right?
Yeah.
They have been making all the moves to prove that they are truly about decentralization. I don't know what that ends up looking like when Coinbase is connected to Base. I don't know if they are, they'll be gatekeeping their users on Coinbase, the SEX with Coinbase, with Base. Because they have to worry about protecting users, right? And so they'll only show them certain things or allow them to do certain things. I have no idea. And they have some regulatory compliance they'll have to deal with regard to that. But I keep seeing interviews and articles about what's going on at Base, and I'm just really impressed at this point. So anyway, and evidently somebody else thought what they were doing was the right thing and gave a multi-million-dollar company a domain that he could have probably charged a fortune for to him. So I just think it's a nice thing to see. So, yeah,
to Shizzy's question.
What did he say? Sorry.
I just don't understand the Base revenue model. How can Coinbase make money for its shareholders using Base? I would think of it as, they're probably going to put it under a DAO or some type of structure, I would think. And, they would have, I guess, the control of the governance tokens. So when
they have said they're not going to do a token.
oh, they did say that.
Yeah.
Oh no,
Yeah.
I mean not to. No, I mean in the sense that okay, so not any token, but maybe a DAO token of some kind that's not that's a private or an NFT or something.
Maybe.
In a way where they can get the transaction fees out of it up into their shareholders. It'd be something like that, Shizzy.
Yeah,
I'm guessing
DAO,
though.
I think their DAO will get part of the transaction fees. I really do. And they're giving part of the transaction fees back to it's on Optimism, right? Yeah, on Optimism. The other thing is this. I mean, think about this. So I have been using Binance US. I recently started going back to Coinbase again, right?
Mm-hmm.
The integration between Coinbase and the Coinbase wallet is really sweet. The UI is really sweet. The UX is really sweet, right? So think about this. If you have the centralized exchange here and you have Base, the protocol, and you have the wallet, which you assume that probably a majority of users initially will be using their wallet, and they will probably build in functions that make it better to use their wallet on Base, but other wallets will be allowed to use it. Now Coinbase is the gateway, right? Coinbase is the bridge. Coinbase is the exchange. So they're still generating revenue and transaction fees, because what better way to onboard your way into their DeFi protocol and all the, and let me tell you, I saw a list of projects that are deploying on Base, and it's fucking gigantic. I mean, it's going to be at launch, it's going to be huge.
Well, it's just going to be a big posse of like fatted calves there, just ready for the slaughter, basically. You know, so everybody's going to be there.
Yeah. So Coinbase,
I didn't mean that in a negative way. I didn't mean that in a negative.
Yeah. Coinbase is going to be the on-ramp, right? And then Coinbase becomes the on-ramp to all layer DeFi protocols and chains, because it just makes sense at that point. So they'll make money on that. Plus they're pushing hard on this no fee, $40 a month package, right? So they're going into a subscription model. They're going to become a SaaS. And now users who don't want to pay fees for trades and or onboarding or exiting their fiat out, they're going to just use Coinbase. I mean,
wait, so for $30, you don't have to pay the like the trade fees?
I think it's $39.99 a month, and there's no fees.
Wow.
Yeah.
Because a lot of times, you know, I primarily use it for off ramping, but you know, you're making that move in, and then you got to convert ETH to, you know, whatever their USD, like kind of holding pen. And that's usually a good $20-$30 right there.
Yep.
And then the withdrawal is free if I remember correctly, but you know,
trading.
Yeah, and then trading too.
Yeah.
Oh, trading is free as well. So okay.
With the subscription. But so yeah, but I mean, look, they're moving themselves into a subscription model. And let me tell you what, I guarantee you Coinbase is going to be deploying protocols onto Base, right?
Yeah.
So they're going to have an exchange, they're going to have lending, they're going to have staking, they're going to have all kinds of shit on the chain. And so they'll be making money from all of those protocols. So I have no worries about their revenue model. I think they are positioning themselves to be a giant in DeFi. I really do. And I think that they can still honor the spirit of full decentralization. I don't think anything stops them, but they have 100 million users at Coinbase that can now deploy onto DeFi, and they can make it easy for them. And then what happens? Now you have millions of users coming into DeFi who now understand it and get it. And then now it's a firewall on the federal government, because now you're going to start getting the common guy who's just dabbled in buying tokens, finding out what really is here. So anyway, to me, I'm fired up for what's going on with Coinbase and Base, and I'm impressed with it overall. Niblet said flow. Yeah, I think he was saying what I said in one word. That's great. He said, she said, if using Coinbase, pay the $30 monthly fee, I have saved hundreds of dollars. Absolutely. And Niblet says, but as Coinbase does more exchange, custody, clearing, that starts sounding like FTX Alameda. Concentration worries me. Look, I mean, I think anything could happen. But at the end of the day, if they move most of their business operation into decentralized protocols, there's no custody, right?
Yeah.
And they are already going for and applying for to be an institutional custody, regulated institutional custody provider in the new scheme that Goldman Gary has put forth. So I have a level of trust in them that I don't think there's much to worry about there. And I think that their goal is going to be to make a seamless transition for people into DeFi, so they're not even really aware they're in DeFi.
Yeah, and I'd also say that in difference to FTX or SBF or whatever, Alameda, is that those guys had no infrastructure.
Yeah.
I mean, that was like us running a $20 billion exchange on the back of a cocktail napkin.
Exactly.
And they were front running everything. It was a total friggin' disaster. Well, Coinbase has all the rails in place already as a public U.S. company.
Yep.
So I don't really worry about, the type of stuff that went on at FTX and Alameda. And I don't really worry about, the custody stuff, whatever they're holding, because, as a U.S. public company, they have access to all of the, other instruments within the financial system to sort of buoy up holdings or, mitigate loss and things like that. So I'm not super worried about that either.
Yeah. And look, I'm never going to keep a ton of money on Coinbase itself, the centralized exchange anyway. But the idea that they can onboard a lot of people into DeFi is very exciting to me. And if they can maintain their ethos about it, which seems like they're trying to do, of decentralization, I think there's a ton of potential there. So speaking of front run, Joe, found this little tool, Mev Blocker. So all you do is you replace your RPC endpoint, and this gives you full automated protection for all types of med. And you can get paid by searchers for your transactions.
Wow.
Pretty cool concept. I had heard an inkling of this coming a few months ago. It's out now. Protection from front running, sandwich attacks on all types of transactions. Profit from any back running opportunities your transactions create. A fast, free censorship resistant solution open to all searchers and builders. So now builders can integrate this into their platforms and protocols as well. So pretty cool. I think this is just Ethereum. I don't know how much of it's a problem elsewhere, but great concept. The website's mevblocker.io, mevblocker.io. So Niblet said Alameda licensed infrastructure back to FTX for a couple $100 million a year, but I think it was just a balloon sculpture of a dog.
Yeah, I think you're right there, Nibs. If that's sophisticated.
Yeah, and the medicine cabinet in the restroom full of.
Yeah, it might just been like bottles of Adderall and double sleeping bags there on the office floor.
So I took a little trip through recent raises in crypto land and pulled out a few that I thought were kind of interesting. So I thought we could go through some of these today, Joe.
Cool.
You and I in the past have looked at some of the carbon offset plays, and there is a new one. Let me see how much this one raised. Carbonable raised $1.2 million seed on the 21st of March. And the interesting thing on this one was Starkware was the investor. So I assume they're building on that. But anyway, Carbonable is long-term high yields. And I don't yet know. I assume they're doing offsets as well. NFTs showing your backing, paying 26% APR. Is that $789.32 in total revenue? Oh, they let you simulate your investment.
Yeah, I see. If you look at Launchpad, you can see the projects that they're doing. So they're actually doing, actual real forest land and things like that to maintain. So that's kind of interesting.
That is
that's
awesome.
when we were talking to. That's kind of the big, spread in this carbon space is that. It's what types of credits are you getting? You really want the ones that aren't like stuff that happened in the past. You want the ones that are like the going forward ones. So
right.
I'm looking at, if you look at the section, I'm on their website, carbonable.io. Launchpad is the menu tab. You'll see like different forests. These are all in Madagascar, the ones I'm looking at.
Where do you see Launchpad?
Oh, I'm sorry. I pressed the invest button. Top right, where the green one. Press that. Yeah.
Okay.
Yeah, there you go. And so then
so there's specific projects. That's friggin' awesome.
Yeah. So look, this is this Costa Rica one, Corcovado. I know that area pretty well. But look, you're talking about a 30-year project. to maintain that for us. So I think that kind of stuff is pretty cool.
Yeah, and look at this. Look how they do it. And you're right, 30 years. Look at this. They show the returns on your investment. So $10,000 investment, and they only allow a duration of 20 to 30 years for your investment. So you're looking at a 26% base APR. So you're looking at a return of $78,000 on a $10,000 investment in 30 years.
Yeah, like I just clicked on the Costa Rica one, and it's sold out, but it looks like it was 110 USDC per NFT, and there were only 160 NFTs, and the average APR forecast, I guess, for the 30-year time period is, 10 to 43%.
Yeah, that's awesome. This
So
is cool because this shit is so much more tangible, right? It's like real world actions they're taking. That's very cool. This was their first carbon sink project, a small reforestation project representing 160 NFTs on sale May 6, 2022. So what they're doing is they're selling the credits from the project that they're doing, right? Is that the idea?
it looks like that, or they're raising the money to go do the project.
No, I know they're raising the money to do the projects, but I have to assume the back end revenue comes from selling the credits.
Generating the new carbon credits that you create, by running the project, I guess. There's different groups that you go to for like investment banks for underwriting.
Voluntary carbon credits. Yeah.
Yeah. And there's different, I can't remember the names of them, but there's different ones, and somebody's got to sort of underwrite it or certify it as this or that. And those are the ones that I think then they can go park in other protocols, like maybe Klima and the other ones. Probably some stuff on Cello as well, where you can generate yield with those too. It's just doing all the stuff we've been doing with, crypto into protocols, but doing it with, again, there's something coming out of it, and you're doing it with the credits that are generated from doing, I guess, positive carbon type activities.
Yeah.
I mean, this is kind of where this is the stuff that we always, I don't want to say we forget about it, but, myself, I get so buried in all these yield plays and things and trying to generate higher, ROIs. And then you kind of come back to it and you go, well, wait, but there's so many other cool projects out there that are actually doing stuff that have, these yield plays that you can do on top of their efforts.
Right.
We've talked about the Genomes DAO guys a lot. I saw over in Camelot, you can get 600% APR on a genome ETH pool. You got to lock it for 3 months, but, so it supports the underlying activity, which is the genomic privacy stuff and monetization. Here, the same thing. You've got underlying business model. Whatever you think about climate stuff, they're actually doing something. I don't think many people can argue against planting trees or, reforesting. It's good no matter what you believe in. But you can still go play. You can still go play in the DeFi stuff with these NFTs probably, or, the carbon credits themselves.
Here's the interesting thing, right? It says they're NFTs. They're not locked up. You can resell them. So you can make your investment and go out, and I'm sure there'll be a borrowing market against it, right?
Yeah.
You know what I mean? Long-term lending. There could be, you could sell off, if you need the cash in 5 years, you can sell off the remaining future revenue from it. This is really nice. I like this. I like this a lot. Carbonable.io.
Look at stuff like this. Even like the one I think Shizzy turned us on to, the Hive Mapper one with, the honey token, where they're just going out mapping up the world.
Yeah.
With drive cams. So again, you have an underlying functional thing going on.
Yep.
That's sort of the mission of the entity. And then all the other stuff, the crypto, monetization, all of that, is the incentives to get you to implement the mission of the entity. So, we're a lot of other things that we do, the financial games ones that we play in and things like that. It's just all financial.
Yeah.
It's like, it's not, you're basically going against, you're going against everybody else to take their money. That's about it. Exactly. Nothing wrong with that, but, provided you're doing the taking, but, there's nothing really beneath it. And this is where I think this is the stuff that, in my mind, I've always thought of crypto as like these types of things. with the big, what we talked about yesterday, the tokenization of real world assets, unlocking the $67 trillion in real estate that's very hard to get access to, different things like that. That's what makes this space. And all the stuff that we play on, the gamification stuff or the yield stuff, that's just going to sit on top of all these protocols in some way, shape, or form.
Absolutely.
So super positive in my mind.
Yep, absolutely. All right. So this is interesting to me. I did an interview before we launched the show when I thought I was going to launch a show with the folks from a project that was building on a blockchain called Radix. And this is interesting to me because they've been so utterly quiet, right? I mean, most people haven't heard of them. And if they have heard of them, they don't know very much about them, whatever. To me, this is fascinating because they have been so quiet. They have a community that seems pretty strong, at least from what I remember from 2 years ago. But what's interesting to me is they raised more money. And I'm always kind of fascinated on these projects that seem like they're probably dead. They raised 10 million in March. Their first raise was 4.1 million in 2020. And then in March, they raised $10 million at a $400 million valuation from somebody called DWF Labs. Just kind of overall fascinating to me that some of these things are still functioning and people are still willing to put money into them.
Yeah. I mean, what is their big, I don't really remember these guys. What's their big kind of differentiator?
Unlimited scalability. I think it was, maybe it was JavaScript based development. I don't remember. Hold on. Let me see if I can find it.
So they must be playing on that theme that you've brought up a lot about, turning JavaScript developers into smart contract developers. Basically.
Oh, they have their own, they have their own something called Scripto. Asset-oriented programming language for DeFi. Open source smart contract language of the Radix public network. Scripto rethinks how smart contracts are built to finally let developers create secure and powerful apps that users can rely on, spending most of their time encoding on functionality, not worrying about losing money. Scripto is asset-oriented, meaning that Scripto is the first language where assets of value are first-class types that ensure nothing is lost or unaccounted for at runtime. Based on Rust. So Rust programmers will be able to.
Those are the Solana guys, right? Solana's Rust.
That's what Solana's based on Rust. Yeah, but Rust was a language before Solana. So anyway, just think I always find it interesting when these projects that you seem like are dead or zombie are not actually that. So anyway, let's see. We got some comments. Niblet says, I get approximately 20% yield is 4 times better than common TradFi savings vehicles, but at 100x the risk, I have a hard time getting excited about the risk reward. Well, I think Niblet's part of the reward is saving the planet, but don't so $1,000 risk for that long-term gain. Put it in my kid's name. 30 years from now, they have whatever,
a nice beachfront. A nice forest to go tear down and build a beach house on in Costa Rica.
Niblet says, but if there are extra benefits, that can change things. I get it, dude. It is a risk. They could disappear. The credits.
All of it is. Yeah.
We could get there's all kinds of carbon eating technology coming on the market. I mean, the value proposition could die. Absolutely. But, if you can get your money out in a few years, you can get your money out. Shizzy said, I'm not a big save the planet guy. I like ROI. Well, you got to have some place to spend it, Shizzy. So if the planet's burning, it's
not going to be worth anything. But the thing is to combine ROI with positive actions. And
exactly.
Versus, we can all get ROI strip mining fucking national parks and things like that too for coal or whatever's there. But that's got so many negative social costs attached to it. I think if we could figure this out, and unfortunately to Shizzy's point, a lot of times this doesn't do what everybody thinks it's going to do because it gets exploited or corrupted somewhere along the way. But some will make it. I mean, critical mass. I mean, eventually it will start turning the corner on some of these things. But again, everything is risk reward. You're absolutely right.
Yeah.
I mean, if I had $10 billion, I probably would just, have it in risk-free instruments, earning 3% interest because, you can't even spend all that money.
Yeah.
So, but we're all trying to make it.
Yeah.
So make more money.
I'm going to assume this next one I'm going to talk to you about was a down round. Their original raise was 30 million in September of 2022. Now 5 million in March of 23. They do not, though, tell me valuation in the documents, but this is a metaverse infrastructure project. So essentially the idea is it makes it easy for developers to build metaverse around their project and create them and grow them. This is another one of those, I guess you're making a longer term bet on hopefully the metaverse actually exists someday. But I wouldn't have put 5 million there for me personally.
Well, so they raised, you said 20 or 30 in September of 22, and then they just turned around and raised another 6 months later, basically, or 8 months later.
Yeah.
I mean, they must have really pissed through that cash. I mean, it's like now, oh shit, vacations are coming up. We got to go raise some more money so we keep payroll going. I mean, that just seems like something's weird there.
We provide the metaverse creator economy with computational power to build, run, and monetize virtual worlds and create new experiences.
Okay, so they're going to be like the cloud hosting platform or compute hosting platform for different metaverse? Okay.
Exactly. Yeah, they kind of provide the infrastructure and the tools, I think, to launch them.
Well, why doesn't AWS, all the other cloud providers probably do it too, or will do it?
Exactly. Yeah. Niblet says agreed. Smog had a lot of gold, but where does an evil dragon spend it?
Yeah.
No, I might hookers and blow virtually, of course. That's
shock. Yeah, I might write this investment off right now at this point. On this metaverse cloud compute platform thing.
Well, interestingly enough, it was not the same investors. The original investor. Oh, wait a minute. I thought it was. Oh, the lead investor was Molten Ventures. They're nowhere to be found in this round. What's interesting though is Ericsson is in this.
The telecom company?
Yeah. That's interesting.
All right. So they must be thinking something around, mobile communications and I guess how that's going to cross over between real world and metaverse worlds.
Yeah. Not a single remaining investor from the first round. Oh, this is Series A plus, not Series B.
So maybe they just extended it. Maybe it's on the same terms.
Maybe this is more of a bridge.
A plus,
more money to it. Maybe so.
But man, those guys have been pissing through some cash if they're out looking for another 5 and 6 months.
Yep. Absolutely.
Unless Ericsson came to them with a partnership deal, and then they said, "Okay, how can we get in?" And then to steal the deal, what are these guys called again? Who are these guys?
Hadean. Hadean.
Hadean goes, "Oh yeah, well we could just close this round. Yeah, we can just piggyback on the last investor's terms there."
Yeah.
I mean, to get their money in, but the better move would have been to position them for the next round.
You would think, yeah.
Yeah, unless you really need the cash, which is
just give them a bridge loan.
Yeah, or anything. Just part of a strategic partnership agreement, because I wouldn't want to give up, more equity at that lower valuation of the Series A. I'd want to be, well, fuck it, it's worth twice that now. So
yeah,
we'll give you 5 at pre-money 400.
This one was interesting to me because we love the infrastructure plays. Particle Network, a full stack middleware platform for Web3 mass adoption. In other words, crypto infrastructure. But they raised 7 million, and Animoca Brands was one of the investors. I guess they primarily invest in gaming companies and own gaming companies. They do, a lot of lingo. The fastest path from ideas to deployment in a single workflow for high performance dApps. Works on Solana, Ethereum, Polygon, Binance, Avalanche, the whole spectrum. Saves time and improves reliability, allowing devs to optimize and expand their dApps. 82% average reduction in time to market, 99.99% SLA uptime, high availability. So they offer an authorization service, so mobile number, and email login capabilities, a fully integrated, fully functioning wallet that can be integrated with your dApp in under 30 minutes, an NFT service that can be integrated, create, manage, and distribute NFTs, implement an NFT marketplace in your dApp, and a node service, high performance access to all major blockchains with supercharged reliability, data correctness, and scalability. I haven't taken a very deep dive in this, but I would definitely, I like infrastructure. I like infrastructure.
Yeah.
Wallet as a service. Integrate full functioning wallet features into your dApp in 30 minutes. Embed Web3 experiences across DeFi. So it looks like they may be making a play for Web 2 to Web 3 with the integrated wallet capabilities. Don't know. Swapping capabilities, buying and sending via fiat, fiat to crypto APIs. Supports any use case, payments, gaming, DAO, metaverse, NFTs, DeFi. And I guess they have pre-configured interfaces and UIs that people can use. So anyway, looks like a powerful offering. I like those infrastructure plays. So
who put the money in?
That was Animoca, which is the big gaming investor. Long Hash Ventures, GSR Ventures, Hashkey, and OP Crypto. Only one I've heard of is Animoca.
I think I ran into Hashkey somewhere recently. I think they're a big Hong Kong operation for some reason. Tied into that, there's that conference going on. Next week, I think, is their like Web3 conference in Hong Kong, and I think it's hosted by Hashkey or maybe Hash Power. Who knows? But they seem like they're kind of an up and coming player, or trying to be. So yeah, no, I like that infrastructure stuff too, because I think it just makes it easier. Yep. The guy, it's like what Merrick from Cello was saying yesterday, that simple connect or whatever that product was that, just allows you to send, I guess, crypto to anyone in I assume they have to be somehow signed up too, but, to just go through your phone contact list and go, oh yeah, I need to send Brad those 2 ETH, and boom, send 2 ETH. Right. Without having to go go into a bunch of, I guess, wallets and do all of that. It just makes it does all that in the infrastructure or in the wall, so to speak. Yeah. And it's just I got to send Brad that $10 or whatever. Boom.
Yeah. Don't forget to send me that 2 ETH.
Yeah. Yeah. I forget what?
Next one up. I haven't taken a deep dive into this, but I like the real world assets play. This was a $3.8 million round in their seed round. They had previously done a $1.2 million ICO with a bunch of venture capitalists involved. This one is invested by Singularity Ventures and GTM Ventures, and it's a lending protocol for stablecoins to underwrite investments in real world businesses. Now, not sure what exactly that means yet. Right now, they have $11,578,000 in deposits, 7 pools, 1 active, earning 20.20% APR. What I don't understand is I was looking for, oh, here we go. View assets. Let's see what the pool is. What are the real world assets? They don't tell you what the real world assets are. Or are these people that have invested? I'm not sure I understand. Oh, are they? But it says invoice amount. Are they lending? They're lending against
factoring.
Yeah, that's what it.
What's the site?
Like.
What's it called again?
Yeah, invoice receivables. It is called polytrade.finance. About fucking time. I was wondering when we were going to see one of these.
Bringing sustainable
do that with credit card cash advance for credit cards. That's a multi-billion-dollar industry. Oh, look at this. Sandeep from Polygon's an advisor. Sameep from QuickSwap.
we have a token?
I don't see a token, sir.
Polytrade protocol. Take a
It
tour.
says find us
Skip.
on CoinGecko. Let's see. They do. It's currently trading at 29 cents, up 31.2%.
TRADE. Okay. Yeah.
Yeah, in the last 24 hours, high of 0.308, currently 0.2914. 30 days up 230%. And last year up 39.2%.
Yeah, it looks like, I guess whatever you put in there, it looks like you're getting 20.5%, 20.57% APR. Looks like you can get on just straight up USDC locked, get 6% APR. And there's some bonuses, look like another 15% of bonuses. And then another token called T-Spice. Yeah, we need to kind of dig into this.
Yeah,
because
I
again,
love these models.
Yeah, no, I mean, I remember like trying to factor invoices back in the day, and you're going to the bank or someone. You eventually got it done. This is government invoices, but you were giving up like, I don't remember the exact percentage, but it was definitely not something that was negligible.
Right.
It was I want to say over 5%.
Yeah.
And then you had your payments that had to go to some escrow account at the bank first, I think. Your client, whoever the client was you were factoring.
Yep.
Then they would take their money and then send the rest to you. So you really put someone in between you and the money, or you and the customer.
Lockbox. Yeah.
This looks really interesting.
Yeah. Look, I mean, I think an industry trade is only a $6 million market cap. I think this is a good industry, but it's a lot more manual. The industry I want to do this, I want to apply crypto to is the cash advance model. And that is the capital advances against credit cards, because right now that industry is usury. It fucks over the businesses that it advances money to based on future credit card revenues. And there's an extreme opportunity to still have amazing returns on the money invested with cash advances and support the businesses that are borrowing the money to help them grow. Because the real money in that is not the interest that you charge or the discount that you get for the money you're advancing. The real money there is you get the credit card processing revenue, because now they move their credit card processing to your business, to your credit card processing company. So now it's in your interest to loan them money for marketing or equipment or whatever they need, because the more revenue they drive, the more money you make, right?
Yeah.
So anyway, Shizzy says 22.8 million circulating supply with $100 million max. So we'll take a deeper look at that and see what we think. Maybe we'll come back and talk about it some more.
Yeah, it's up 31% today. So I guess that raise just wants to come out, that notice.
Yeah, I actually think it was a bit back. Hold on, let me see.
Oh, okay. That's promising.
A week ago.
Oh, that's good. So that means it's moving on something else.
Yeah, maybe they maybe it's just Polygon right now. Oh, that was not good.
Let me look at the 7-day.
I think I had their Twitter open previously.
Yeah, it was at like 10 cents 7 days ago.
Maybe they've announced some deals or something. I don't know.
Yeah, now they're at 30. So it's done a 200% pop in 7 days. But at that market cap, doesn't, again, scaling in and things like that, because of this recent run up. A lot of stuff's been running up though lately. I've noticed a lot of the small caps, and I've been trying to be super careful to take the principal off fast. But I've seen some like with one of those ordinals one, I saw like a 300%, 400% move in like a day. Of course, now it's retreated half of that back, but my plan was to go back in with it once it retreated, but I still haven't. Because now I'm like, wait, which way is this guy going? Kind of thing.
Hey, this is a really good thread from a report by Binance Research on real world asset projects. I'd like to take a look at a few of these.
Yeah, let's fire it up.
Yeah, cool. Well, not right now, but definitely put it on the list. That's
What's
all
the
I
link?
had. No, I had a few more loaded up today.
Shit, it's already 1:00. Damn,
Yeah.
I didn't realize we're done.
Yeah, man. Yeah, it's old school. We went old school today.
Yeah, I like it this way better because then we just get to talk, and I think that's where all of our decades of experience come into play, because we can
All of our
instantly
brilliance and wisdom on display for the world to see.
Yeah, with the community interfacing into it and all of that. But it's versus just cranking out what other people are saying. We're like creating original content. We do it this way. So
I agree.
But yeah, man, good show. All right.
Shizzy Niblets. Oh, by the way, if you guys haven't started Mandalorian season 3, good shit. Really good shit. So make sure you don't miss it. I think 3, or is this 2? Whatever. The new season of Mandalorian. Fucking awesome. Shizzy Niblets, Chuck. Is that the extent of our participants today? Shizzy, Niblets, and Chuck. Thanks, guys. Appreciate you being here. Love you and appreciate you. Thanks for listening. Those of you on the podcast, please rate and review us on Apple Podcasts and Spotify. If you're listening on YouTube, make sure you click subscribe. Click the little bell so you get alerted when new episodes come out. And make sure you smash the thumbs up so Joe will be happy. Appreciate everybody being here. Thank you for listening. Please tweet and retweet and let people know about the show if you can. And I hope everyone has a wonderful day. We will not be here tomorrow. We'll be back Monday. That's it. Got anything else, Joe?
Yeah. I think I said it earlier, but I don't know if any of you guys have been tracking on Gene or Genome, but on Camelot, I know a lot of us are in there doing different things. There's a couple of nitro pools in there that one in particular gets about 600%. And you stack the Gene token. There's just so much stuff in the pipe. Well, I should probably be careful here. There's just so much potential coming forward in this space. Yeah, no, I'm just trying. I'm like, wait, I probably shouldn't be saying that. But in this space itself, there's, in the DeFi space, there's so much buzz across the spectrum I'm seeing, and a lot of other ones that aren't ones that I'm in. VitaDAO would be one. It looks interesting. I think it's the longevity one. So a few other ones, but this is getting a lot of traction. And I know that there's some big DeFi stuff. God, I don't know if I should. Well, going on at, say, BNB chain. All right. Awesome. There are people really looking at this space. So, to me, you go get 600%, not financial advice, but I have a feeling you won't be unhappy. I mean, you guys know I know this space, so that's why I really and so like behind the concepts here.
Hey, let's do a show in the next 2 weeks dedicated to just DeFi projects.
Yeah, that sounds awesome.
All
Absolutely.
Right. All right.
Yeah. Cool. No, that sounds, because there's so many ways that this plays, and again, it's what we were saying earlier. There's underlying business model applications that leverage cryptocurrency to execute the business models. So
Max Life says NFA.
Yeah, I me. You guys know I've been in that for a while, so I'm certainly not shilling anything. And everybody knows that I own some of that, and I was working with EncryptGen, 4 years ago was when I really, and a few other companies between now and then and now, in that personalized medicine space. And so whomever, there's a fight over this data that's just starting, just like when everybody started, searching on Google 20 years ago. We didn't realize how that data had so much value to other companies that used it. So all of your user behavior data is used and sold and owned by other people. Don't want that to happen to genomic data. It's just a nightmare. You can just spin up so many dystopian outcomes that would not be pleasant. So, but needless to say, that data is paramount to this burgeoning sort of bespoke or personalized or custom medicine market. Like how, when you go in for breast cancer, very specific treatments, not one treatment fits all. you need that data for that. But at the same time, humans have to retain it as their own. And then somehow groups have to be able to access it and research it without compromising that. And that's what I think is the really exciting part of this space. And if you want to look at the other companies from 4 or 5 years ago, it was Nebula Genomics, which is George Church and Dennis Gershon. It was Luna, which was Dawn, can't remember her last name, but a subsidiary of Illumina, which makes all the sequencing machines. And there was Encryption that Brad and I both knew really well. And then Chavome, Alex Schumacher's play out of Germany. I knew him well. You know, everybody got going, but they all did ICOs. I mean, Luna didn't, and Nebula didn't, but the other ones did. And so that kind of is what knocked them out of the game. But anybody that's playing in that space to where keeping that data private, you know, and protecting it, decentralizing it, whatever, but still allowing monetization, they're companies to look at. And there's not that much right now. So, you know, there's very few players, so they're going to get all the attention. That's all.
Somebody had a question.
DeFi, when DeFi index? I've got it in my phone, you know, in my CoinMarketCap app, but I'll start assembling one.
Seems to me it might be one to roll out as on one of the index platforms.
Yeah, I mean, there's just not that many right now that have a tradable thing like a token. You know, obviously the ones overseas do, but all the stuff that was the first wave was US pretty much, you know, only one of those had a token. And, you know, when they seem to have navigated that okay, they sold. But the overseas guys, there was the one in Germany that had a token. But they did an ICO at the very last kind of, you know, I guess it was 2018, first or second quarter. And then right when they did it was when everything tanked, so they didn't last long. But everybody outside the US, you know, why not? Let's slap an index together. And maybe we could talk to the guys at Vintner about that.
Yeah. No, I think there's an opportunity there. That's awesome. All right, buddy. Have a lovely
cool. You too, man.
And weekend, and we'll chat soon. Thank you, everybody, for listening. We love you guys. Bye.
Yeah.